The SEC is investigating Elon Musk's acquisition of Twitter, now known as X. The focus is on potential securities law violations during the $44 billion deal. The SEC aims to ensure transparency and protect investors from market manipulation. They are scrutinizing Musk's public statements and disclosures. The investigation could impact investor confidence in future tech regulations. If violations are found, Musk could face fines, penalties, or restrictions. This highlights the importance of regulatory oversight in high-stakes acquisitions. Elon Musk, CEO of Tesla and SpaceX, failed to appear for a court-ordered testimony before the SEC on September 10th. The testimony was crucial to the ongoing investigation into his acquisition of Twitter. Musk cited an urgent need to attend a SpaceX rocket launch as the reason for his absence. He informed the SEC 3 hours prior, raising concerns about his commitment to the legal process. The SEC criticized Musk's last-minute notice, calling it a deliberate attempt to obstruct their investigation. They argue that his failure to appear without seeking prior court approval shows disregard for the situation. Musk's legal team maintains his presence at the SpaceX launch was critical, but the SEC remains unconvinced. Elon Musk's history with the SEC is marked by previous run-ins and settlements. In 2018, Musk tweeted about taking Tesla private, causing significant market fluctuations. The SEC deemed these tweets misleading, resulting in a $40 million settlement. Musk relinquished his position as Tesla's chairman and agreed to have his company-related tweets reviewed by a lawyer. This past encounter highlights concerns about Musk's compliance with securities regulations. The current investigation into his Twitter acquisition suggests ongoing regulatory attention. The SEC's scrutiny underscores their commitment to transparency and accountability. As a result of his recent actions, Elon Musk faces a range of potential sanctions from the SEC. These penalties could be as minimal as fines or mandatory training on securities laws. However, considering the seriousness of the allegations and Musk's prior history, more severe consequences are possible. The SEC might impose restrictions on Musk's ability to serve as an officer or director of publicly traded companies, including Tesla, SpaceX, and X, formerly known as Twitter. Such a restriction would significantly impact his leadership roles and decision-making power within these companies. Additionally, the SEC could seek to claw back profits Musk made from the Twitter acquisition if they find evidence of wrongdoing. The outcome of the SEC's pursuit of sanctions will depend on several factors. The judge will consider the strength of the evidence, the intent behind Musk's actions, and his history of compliance. Regardless of the final decision, the SEC's actions serve as a stark reminder of the potential consequences of disregarding securities regulations. The SEC's investigation and potential sanctions cast a long shadow over Elon Musk's vast business empire. Beyond monetary penalties, the reputational damage alone could have ripple effects across his companies. Investors and stakeholders may question his judgment and leadership, potentially impacting stock prices and future investments. For Tesla, already navigating a volatile market, the situation adds another layer of uncertainty. Concerns about Musk's focus and potential distractions from the SEC investigation could negatively impact investor confidence. Similarly, SpaceX, with its ambitious space exploration goals, relies heavily on government contracts and public perception. Any legal troubles for Musk could jeopardize these crucial relationships. Ultimately, the severity of the impact on Musk's companies depends on the SEC's final decision and the public's reaction. A protracted legal battle and harsh penalties could weaken his control and influence, potentially affecting the future trajectory of his companies. As the SEC investigation continues, several questions remain unanswered. The agency has yet to reveal the specific aspects of the Twitter acquisition under scrutiny, leaving much to speculation. However, based on their history and focus, it's likely they are examining the timeline of Musk's disclosures, the financing of the deal, and any potential manipulation of Twitter's stock price. The outcome of the investigation could have significant implications for the future of social media regulations. If the SEC uncovers wrongdoing, it could prompt stricter rules governing acquisitions, disclosures, and potentially even content moderation on these platforms. The investigation also raises questions about the power dynamics between tech giants and regulatory bodies. Musk's immense wealth and influence present a unique challenge for the SEC as they strive to uphold the law and ensure fairness in the market. The outcome of this case will likely set a precedent for future interactions between regulators and powerful figures in the tech industry.